Mark, Justin, it's great to see you. Mark, you write that some of the monetization efforts are likely to be 23 and 2024 events. We don't see a near-term path to a material re-rating. What do you think? What do you think happened here?
Well, this company hit maturity, competitive challenges, and then in the one market in the world where they are least penetrated, Asia Pac, I think they've just had a lot of challenges, whether it's content matching, GDP per cap economics issues, and then content matching issues. This is a company I think that's had wonderful vision. They invented streaming. They had these wonderful pivots towards original content, local language shows. But I think they kind of came up short when it came to the next necessary pivot. Okay, they're catching up with advertising now. I think they should have been layering this in, a year ago or more. And it just seems like they're scrambling. I think it'll work for them, but we're talking about a year or two out. So in the meantime, you got a stock that's just going to roll along here at around 10% top line growth. That's not premium revenue growth, and I don't think there's a lot of upside in the stock near term. I expect it to trade in line with the market for the foreseeable future.
Justin, do you blame them for having blinders on? For a long time, their framework was, we welcome the competition. It's going to be a flywheel effect as streaming becomes commonplace. Our biggest competition is sleep. How could they have been so blind to the ways in which other rivals had advantages?
Yeah, I agree. It's analogous to trends we've seen through a lot of other internet models. Food delivery is a great example. If you go back to 2019, Grubhub had said for many years that competition was not an issue and that it was, a material derating. So oftentimes with these hyper-growth businesses that have benefited from just early stages of market penetration, moving up the S-curve, it's easy to have the blinders on and miss changes in competition that are happening. With more time spent in market, we've consistently seen that Netflix hits have had less viewing hours. Bridgerton was barely up, basically flattish in hours consumed, despite having a 9% increase in the sub base. The Witcher 2, which was supposed to be a big hit last December, actually had hours down for season 2 versus season 1, despite a much larger sub base. So I think Netflix is really just over-indexed on total hours consumed. The actual content consumption per sub is in a much trickier proposition. As Mark said, content hasn't traveled as well toward Asia. And now we're in this challenging dynamic of Netflix has to reinvest in content, but it's already spending north of $17 billion a year. So how does it really improve that hit ratio versus what existed previously?
Yeah, it raises questions about quantity versus quality where that content is concerned, too. Mark, I just want to go back to the advertising piece of the puzzle. I mean, you do see advertisers like Omnicom and IPG and others that are trading higher this morning. Is there an expectation out there that for Netflix to actually play catch up and launch an advertising tier, an ad-based tier, that they're going to have to do some M&A here?
I don't think they need to. And I think, I think this is a good strategic step on their part to layer in an ad-supported model. I don't think they need it in North America. They've already got, it looks like, almost 80% of North American households that are watching Netflix. So it's not like they need it in the U.S., but they could use it certainly in international markets, maybe particularly in Asia-Pacific region. That's what our survey work seems to show. I think they can do this organically. It is going to take them a while, and it does seem, just based on the commentary last night, that this is a very recent idea that's come to management. So that's a little bit disappointing. I don't think they need to do acquisition. I think they can do it organically, and I think they'll be able to generate reasonable amount of revenue. But let's put it in context. You can look at what Roku does. I think Netflix is going to do maybe $2 in ad revenue per user. Their core subscription business is doing $11. So it can be accretive in terms of revenue and margins, but modestly so.